An article from Mark to Market suggests that the US jobs data and the CPI would be a 1-2 punch that would strengthen the greenback after it pulled back from extremes seen in late September. The US employment data was sufficiently strong, and the unemployment rate fell back to cyclical lows of 3.5%, which prodded the market to again toy with the idea that the Fed funds terminal rate may be 4.75% rather than 4.50%, and in quarter 2 next year rather than quarter 1. The labor market is still strong as the dollar rose against most G10 currencies last week, helped by the gains after the employment data. Weekly initial jobless claims fell to 5-month lows at the end of September, and the 4-week moving average of 207,000 was the lowest since May. The JOLTS data showed some softening of the labor market, but on balance, it appeared stronger than the Fed thinks is consistent with price stability. The price pressures remain elevated, and that will be the main message from the September CPI on October 13th. And now we're going to head over to our live stream where we have some highlights featuring Trader Nick and Trader Jake.
Let's talk about this. And again, right now I'm currently sitting on a profitable trade with my stop loss locked into profit. So price did come down here this morning, but it did seem to hold support so far. If price comes down and breaks underneath this level today, I will be officially out of my trade for a profit of about $1,150, which is a good trade. I'd be happy with it if it happens. Again, we broke out of the previous high here and now seem to be, just doing a normal retest. As long as this continues to flow, I'll be looking to trail stops and continue to trade dollar Swiss long. But if it does decide to break lower, we'll hop out of the trade. So there's my current trade. This is what I'm in right now. I shared this inside of the Discord. And if you're not already inside of the Discord, then make sure to use the link in the description to get access. And there we go.
Are you trying to find a broker or feel like you need a better one? In the description below, you'll find the link to fill out our broker match form. After answering a few easy questions, our team will reach back out to you with a personalized broker recommendation. Try it for free in the description below.
All right, so let's take a look at the dollar here as a broad scale for a moment. See that we've got continued bullishness here for the dollar. This thing has just been so strong recently. And looking at the 4-hour chart, actually, let's start at the daily. So you can see the daily chart just looks so clean, right? Just until this cracks, to me, there's just no need to try and short the dollar, no need to try and fight it. At some point, it will crack, but until then, the dollar looks bullish, and we continue to look for dollar longs. So that's pretty dang straightforward. We've got a trending market here. And so now we can take a look at some individual crosses and see what we can find for setups. So let's look at euro dollar. So euro dollar, again, daily chart, beautiful downtrend. I got robbed on this one. I tried to short euro dollar, but I was just a little bit early and ended up getting stopped out. So I shorted here and unfortunately in that same candle got stopped out, missed the move here a little bit. But fortunately, I have that dollar Swiss long, which is kind of the same concept. These two are inverted. Dollar Swiss moves up, euro dollar tends to move down, and vice versa. But for me, looking at the euro dollar, we've discussed this recently quite a bit. So off the daily chart, we have that pretty clear. Whoops, I'm not sure how that opened up. We have that pretty clear downward trend. So if I'm looking at euro dollar, I could probably drop it down a little bit and say, okay, well, if we're short bias on this, maybe we look at like the 2-hour chart and we're just looking for structure, right? So we've got pretty clean breaks to the downside here. So if I'm looking at supply zones, we've got this area. So possibly if you get like a retest, so if I'm drawing my fibs from the swing high to the swing low, very similar concept to what we discussed yesterday. Euro dollar looking for pullback plays. If this thing were to rally up to like 38.2, that would be an instance where, okay, I could justify looking to possibly short the pair. So if we get a run up on the euro dollar, if things swing back the other way, we discussed this yesterday, trade ideas basically still the same with short bias up in this area here with possibly a second attempt a little bit deeper along the way. Now, if you tune into my streams every day, a lot of what we're going to talk about is a little bit repetitive. But that's the thing about trading is most of the time it truly is waiting and sort of sitting around waiting for trade setups. It's the longer you do it, the more it kind of becomes just a job, right? And you can still enjoy your job, but it's still a job, right? It's a lot of work. It's waiting. It's not exciting every single day. So here's gold downtrend. Same thing with a lot of these dollar crosses, maintaining just sort of this downward pressure. And again, trend following 101, staying the course here. Gold looks like a sell until further notice. And for me, if I'm looking at gold and I'm saying, okay, well, I'm trying to be in the downtrend overall, I want an action here. What can I do? Well, in the short term, not a lot because there's nothing here. But for me, if I'm swing high to swing low, just drawing my fibs on and I'm looking for structure, I could highlight some levels like the 50% retracement. Looks pretty good at this point. We did not get a pullback from what we talked about yesterday, but we have put in what seems to be a short-term low. If that gets taken out, we'll have to reevaluate. But if we do start to get a bit of a rally here on gold, possibly that 50% looks like an opportunity, in my opinion, to try and join the move. So there's where I'm at with gold. And again, downtrend overall in the higher time frames looks pretty healthy. There's nothing short term here for me. Just looking for that swing trade. If we poke up to that 1700 round number play, I'd be interested in possibly looking to sell gold. How's your trading week going so far?
Pretty good, pretty good. I'm on my third trade right now. I think we're
Okay.
on the same side of USD CHF, if I'm not mistaken. So
Oh,
I just
nice.
opened it up not too long ago. It's in a little bit of profit right now, so we'll see how this goes.
Cool. So did you catch some of that pullback this morning or?
No. So so actually the two trades that I've taken this week before USD CHF were all dollar longs. Took some AUD USD shorts. If I can go find it here. Took some AUD USD shorts on this little break and retest below the support. Won that
Oh, very
trade.
nice.
Then earlier in London session today, I took this sell on NZD USD on this break and retest. Lost the trade. So basically, it's funny. Two of the exact same setups. Won one, lost one. And now I'm sitting here in these USD CHF longs. So on last week's stream, you guys know we kind of just been talking about this dollar strength. It's a recurring theme that we've been talking about in the market is this dollar strength. I believe last time we did the stream, dollar had just broken up here and we were waiting for a little bit of a pullback before we got that next move of dollar strength. And that is actually what we've seen in the market, right? There's been no signs of a Fed pivot. There's been no signs of the Federal Reserve going any more dovish. It's all just been actually signs to the contrary, where we're getting more signs that the Fed may remain hawkish for at least another good bit of time. So as long as that's the case, dollar longs are going to be on the forefront of my mind. And that's probably the main thing that I will be talking about because it's really the best trend in the market, if we're being honest. Obviously other pairs have good trends, but it's uncomparable to the trend and the absolute massive tear that the dollar has been on. So obviously we have to keep our eyes on the CPI numbers. If they come back drastically lower than expected, that may throw a wrench in our dollar long bias. Other than that, kind of just staying the course, looking to long the dollar. And that can be reflected here in this trade that I'm in. So we'll talk a little bit about this trade that I'm in. This was just a simple break and retest play, guys. Really nothing too crazy about it, right? We broke above these highs. We made new highs on dollar Swiss, and we got a nice retest down into this level of previous resistance, turned it into support, got a nice bullish engulfing candle off of that level on the hourly. If we take a look here, this bullish candle, I guess technically it wasn't quite an engulfing candle, missed it by like a pip or two there. But nonetheless, got some nice bullish reaction off that level, continued with the next hourly candle pushing up higher. So I decided to go ahead and take an entry, right? Stop loss below this level as an area of invalidation. May get stopped out, nothing guaranteed that I'm winning this trade, but it's a good setup. It's a good setup to just follow this trend. We have a nice break. We have a nice correction onto this level. If buyers step in where sellers had previously stepped in, then we should get that next impulse move to the upside, and I'll take a nice big win. If I lose about 1%, and it's no big deal. We just move on to the next setup. So that's kind of how I like to trade. I risk about 1% per trade. I look for these simple setups in the market where the confluences are in my favor, and that's all I can really do as a trader, and then try to maximize my wins once I go into profit.